Our trade in uranium may be at an end right now. If you've been paying any attention over the past several days, we have broken support with a series of sharp pullbacks. And I made some updates in the previous update video on UUUU that it may be time to bail for not just leveraged plays, but also for non-leveraged. This is, of course, the Energy Fuels Incorporated ETF that we've been tracking over the past month or so. And looking at our short-term chart here, we did break through our 966 main support twice. You can see a spike down here and another spike. And then we also broke down through our major support at 923, which is the 0.618 extension. That was the one we couldn't break. And unfortunately, we broke it. We haven't been able to rebound back above it. So it's a pretty convincing break. So any long trade on this might be dead at this point. We had a couple of hints that we were running out of momentum when we look at the bigger structure here. We had this entire thing set up as a 1-2 and possibly a nested 1-2. However, if this really were the third wave we were expecting, we should have hit the 1.382 extension based on the fact that our subwave 1 here hit the 0.382. If you hit 0.382 here, you should have a consolidation once you hit the 1.0. We didn't have that at all. We blasted right through it, which would indicate that we should have gotten to the 1.236 and then consolidated with something at the 0.618, with somewhat of a consolidation on the 0.618. We didn't have any of those things happen. And in either case, whether we were supposed to hit the 1.236 extension or the 1.382, we should not have broken down below the 0.764. So that was a big red light flashing when that happened, and things haven't looked any better since. So once again, we didn't hit the 1148. We came up short. So I'm calling this the top right here. And we already have what looks to be a 5-wave impulse going down into support. Any way you count this, it looks like impulses with corrective pullbacks over and over. It subdivides into 1, 2, 3, 4, 5, possibly a wave 2 bounce. And then we may be in the middle of a devastating third wave that could take us a good bit lower. As a matter of fact, we've pulled back so deeply that we are just about to overlap our first wave peak here, which is sitting right around the 909 mark. And we're about 10, 15 cents away from that point. That is not something you'd expect to see in a 5th wave impulse. There is an alternate perspective that we're not quite done yet. So we have invalidated the structure for an impulsive 5th wave here. However, this could count as a diagonal or an ending diagonal specifically, which would fall between these dotted blue lines you see here. So that would call for this being a 1-2, a 3-4, and then of course we'd have a final 5th wave that would take us up to about 1218, right in that neighborhood. However, leading diagonals are dubious. Even if we do have a little higher to go, it's probably not worth playing with any long play at this point. We're very close to the top. And finally, ending diagonals usually precede a sharp change in direction. So we'd probably crash really hard from that point if this did end up having one more bounce up. So that's something to look out for. So in summary, I've exited my long plays in both leveraged and non-leveraged. I'm going to check out some more details on the big picture chart. So again, this is a logarithmic chart. Cut this down to a 1-day view. So a couple of things to note here. I've mentioned time and time again, there's a very common Fibonacci equivalence proportion in which you have your 3, 4, and then you can project the 5th wave to be the 0.382, 0.5, or 0.618 extension off that bigger pattern. Well, we actually already hit the 0.382 extension, which was at 1035. We got a little bit past that, about $1 or so past that. So that could easily be a top. That is a common proportion for the 5th wave top. I know we were talking about going up to the 0.618 and things were looking good, but the way this thing has pulled back, this could very well be the top. Another common marker for a 5th wave top is hitting the 1.764 extension of our larger 1-2. That falls right at 988. We crossed that as well. Didn't quite make it to the 2.0. And that actually makes sense because based on where our bigger third wave fell between the 1.32 and the 1.618 extension, you'd expect our ultimate top to fall between the 1.764 and the 2.0 extension, which is exactly what it did. So another indication that we did already hit our top. And of course, when we look at the shapes internally, there is the look of completeness as well. So of course, Elliott waves are fractal by nature. So we have a 1, 2, 3, 4, 5. And of course, each individual subwave subdivides into an impulse as well. So you have a 1, 2, 3, 4, 5 for your third wave, 4th wave, pullback, and then your 5th wave. This I thought was a 1-2, so we were very bullish. But the way it has moved over the past several days, this red count is how I've recounted all this. This could have been a very hard to see 1-2. Then we had a 3-4, which follows all the proper Fibonacci proportions. And then the top fell somewhere between the 0.764 and the 1.0 extension, which is common in a final fifth wave, especially in a commodity. You see that same fractal here where you have the fifth wave of that fifth wave. So you have a 3, 4, fifth wave, that top right at the 1.0 extension again. And therefore you have a bunch of nested 3, 4, 5s, which are indicative of a final top. And as I mentioned in the short-term picture, there is a chance this is an ending diagonal. So maybe we squeeze a little bit higher into the $12 to $13 range. But either way, not much upside and tremendous downside risk. So it's not something I would recommend playing. It's the right time to execute your exit plan. The final thing here is the look. So again, the purple pattern that I originally had called for a 1-2 and then a 1-2 and maybe a nested 1-2. However, when we do look at this on the up close, which we did on the short-term chart, this 1-2 should be proportionally larger than this 1-2. This is so large that it doesn't look like a 1-2. So this is better classified again as a 3, 4, and a final fifth wave extension to complete the pattern. So this is, of course, the Energy Fuels ETF. There are two other assets that are showing us the same pattern. URA is the global X Uranium ETF. I've been tracking this, even though I haven't presented this in our video series. It has the same structural pattern, and we have the same situation in this ETF as well. We topped well into the topping range. All the proportions look right. And you have that same subdivision where it looks like a third wave and a third wave, and then finally a fifth of a fifth of a fifth. The URNM ETF showing the exact same pattern as well. This is the North Shore Global Uranium Mining ETF. And you have the same big picture pattern with the fractal fifth waves completing in rapid succession at the end of this pattern. It too topped between the 1.764 and the 2.0 extensions. With all that being said, we do not yet have a confirmed top. So there is a chance we go higher. Maybe this isn't the top, but it's looking like a very small probability right now. For us to be able to confirm that the top is done, we need a deeper impulse that would take us down below the 745 mark. And then we'd need to see a corrective bounce. So a zigzag pattern up, a certain amount of retrace. That would tell us that we've very likely topped. Once that happens, it may take a while for the larger correction to materialize. So this whole thing is an impulse. So I'm calling that a larger wave 1, higher degree. And our larger degree wave 2 would take us somewhere between 219 and 411. And that is based on a 38 to 61.8% retrace of the entire impulse that we have had thus far. In order to prepare for this thing, of course, for leveraged, if you have call options, you really should have been out by now. I did give the warning to exit your call options at the 966 mark. We broke the hell out of that one, and we've broken down below 923. So you should not have any call positions left at this point. However, if you are planning a short, I would not fully prohibit that. It would be possible to buy some puts. You do have a clean 1-2 setup. We may have a bit deeper to go and then a corrective bounce. That might be a good place to buy puts if you are looking to short this stock. But I will not go over the details of such a play as I'm not going to be partaking in it myself. The more complicated question comes if you're a long-term investor in the uranium sector. We may have a multi-year bear market. It's not clear how long this wave 2 will take. So that would be a great buying opportunity for the long term. However, if you did buy further back, maybe back in 2020 or early 2021, you may opt to hodl through this whole bear market if you're a long-term investor. So you're going to be in the red for a while, possibly, but you do have your eyes on the prize and you're looking at this as a long-term play. You do have the option of possibly selling part of your position, take some profit if that strategy works for you, especially if you can capture a long-term gains tax treatment. As for me, I have, again, exited all my UUUU positions, and my philosophy is, of course, abundance mindset. There's always better trades to make, and there are a lot of other bullish asset classes that you can reallocate into. Right now, I'm very closely tracking silver, copper, and then the oil and energy sectors. I will very likely be covering those in upcoming videos. So again, if you are a long-term investor, you do you. May be best for you to hold on to what you have. So hopefully that was helpful. I hate that this kind of caught us a bit off guard, but when we top, we top. If you did exit within the past few days, you've still captured a heck of a profit. So I'll still call that a good trade, even though we have potentially topped. So hope you enjoy the video. Don't forget to like. If you'd like continuing updates, don't forget to subscribe to my channel. And until next time, thank you for watching and happy trading.